Hey everyone, welcome in to another daily editorial here on the KE Report. Time to focus on some of those wild market moves that we saw this week, especially on Thursday with a pretty significant drop in the broad averages. That's even on the back of Nvidia's earnings that pretty much beat all expectations. That couldn't even hold up those markets, but interestingly enough, on Friday today, we're seeing these markets fight their way back, and the S&P pretty much right now for the week neutral. So very interesting to see that. We're chatting with Joel Elconin, co-host of the Benzinga Pre-Market Prep Show, also editor of the Pre-Market Prep website. Joel, those Nvidia earnings that came out on Thursday, as I said, they didn't hold up the markets. The markets really went through a drop. The Dow had its biggest single day drop in over a year. We had to go back to March of last year for the drop of that significance. What was your takeaway from the weakness that we saw in markets yesterday? But again, the ability of investors having that buy the dip mentality to buy it back today.
Yeah, good afternoon, gentlemen. Thanks for having me on this Memorial Day 3-day weekend here for us Americans. I know you guys had Victoria Day last week, so belated happy Victoria Day. It's just Wall Street just being Wall Street, right? High expectations for Nvidia. They met those high expectations. They exceeded those high expectations. They announced a 10-for-1 stock split, increased their dividend. It's just amazing the way the company has increased its revenues. And that was on the backdrop of a choppy session on Wednesday. You can remember FedSpeak about rates. I'm not sure if there was any data that came out on Wednesday, but the Fed heads talking in between the meetings and whatnot and being a little bit hawkish. And then that had the sell off, a choppy sell off in her day. And then absolutely no one wanted to be short. Absolutely nothing going into that Nvidia report. They ripped it overnight. They took out major resistance, and they really had you thinking that, okay, here it is. We've been consolidating. This is your breakout. And they started selling about 10 minutes before the regular session started. They sold right off the opening bell. And then at 9:45, you got some PMI data that came in hot. And so that was another catalyst to stick a fork in the market. And people just got caught just riding this NVIDIA train. The sell off was exacerbated a little bit around 3 o'clock when Fed Waller talked hawkish. And then, boom, your typical pre holiday trading. People wake up, you hold the close from last night, you hold Thursday's close, and then buy the dippers. Come in, and here we are basically for the S&P, basically flat on the week.
Well, and Joel, you've made the point on our show before that on Fridays in particular, there's a propensity for the markets to kind of end on a high note, or at least a dramatic move. And so we saw all of the pain from Thursday get reversed today with the buy the dip. Do you think that's playing into that Friday effect before the long weekend, or do you think people are just still encouraged by all the growth they're seeing when they look at these earnings reports?
Yeah, I just think that it was just a little bit of a rug pull, a little bit of liquidity, a little bit of consolidation. You do have options expiration on the Fridays for some of the weeklies, but not the monthlies. And the market just got a little bit ahead of itself. Unless we have a 40-point rally, we got a ways to get up to the all time high. But yeah, this week it looked on Thursday, hey, we had a chance to end on the lows. But right now it's still just consolidating that big move that we have and not really breaking down.
No, we're not really breaking down. But Joel, what about time of the year that we're in? That whole sell in May and go away. May has been a fairly good month for the markets. The Dow, after their big drop, has pulled back a little closer to where it entered the month, but again, still up for May. It looks like May is not going to be a major down month on any degree. What does this mean for the rest of summer in your eyes?
You could be in for a quiet summer. You're pretty much following the historical patterns for a presidential election year. Things seem to be a little bit not resolved, but a little bit quieter on the geopolitical front. The earnings, you can't argue with the earnings that came out this month and coming out for Q1. Stock buybacks, Apple, it's just there's just a lot of liquidity out there, and people are saying, hey, maybe 5% in the bank is not good enough. So right now it's steady as she goes. I don't Earlier in the week you had the hawkish talk from the Fed notes. That was in on Wednesday. It was the Fed notes higher for longer or maybe having to do more. But man, this Goldilocks markets, they ignore the bad news, or the bad news will take hold momentarily. But right now, the buy the dippers are in firm control of this market, especially recovering from the price action that you had yesterday.
Yeah, Joel, it has been in a Goldilocks zone, but let's pivot over to gold, which hasn't had as much of a Goldilocks week. It was down most of the week. It started on a high note and then gradually sold down. Same thing with silver, same thing with copper, and even nat gas. So a lot of the commodities, after having a blistering run the week before, rolled over this week. What do you make of that?
A lot tied to the interest rates, right? In the dollar, right? If rates are going to be going up or not going down, that's not great for the gold, the commodities. Copper, as big moves are founded by counter moves, and copper had a big move, and then there was a little talk about Japan or China won't be buying as much in the markets, especially in those metals. For every move there's a counter move. I'm looking at the gold market for you. I know you got some gold bugs out there. You got a good level. You got a pair of matching lows just under 30, 23, 30. So I will look at that as an important level. But and once again, the markets get ahead of themselves. They reached that all-time high from April, and they just did not have enough momentum to carry it through. Couple bad days doesn't break a trend, but definitely, at least the price action in the last 2 days in gold is a little bit concerning. But now you're getting a little digestion and see what it has in store for us next week. I'm still holding on, still a holder. I wish I was a holder of Bitcoin more than I was a holder of gold and silver. But every move has a counter move, and just cooling off a little bit.
Joel, when it comes to especially copper and silver, those moves were so aggressive just in the recent few weeks. And some people were pointing to short squeezes here. Is this the type of action, these drops that we saw this week, the back end of what happens after short squeezes?
Yeah. I haven't looked at the commitment of traders lately. I can't give you the ideas or behind the short interest. I just think you have a lot of anticipation in the copper market that, hey, how are you going to make these chips? How are you going to make these factories, right? To build the chips that you need copper. Running with the AI stocks, also natty gas, which has just been so depressed. You hear, okay, well, how are you going to run all these major facilities, right? What's the cheapest way to these major data centers that are producing this AI? Well, natural gas is certainly an alternative. Natural gas, the relative performance of that has been horrible over the last couple of years. So just maybe playing catch up to some of the other commodities. But I think right now, if you look at the inflation picture, you can certainly be encouraged by what you're seeing in crude oil. But you know what that means? That just means OPEC is going to get together. They're going to do some more cuts, and then you're going to get a pop, and then you're going to get a fade. As much as you can maybe take a hawkish side of inflation because the way some of the commodities have acted, that oil is so important. It's so important to the consumer. It's so important to businesses. I think as long as commodity now it's at its lowest level than it's been in months. So keeping an eye on the crude oil market. I'm expecting OPEC to pull a fast one real soon, and then you wake up and crude's up $4 or $5, and then you rinse and repeat on that. So that's taking a look. That's a look at the commodities markets.
Well, Joel, just circling back to natty gas, we have a lot of people interested in trading this sector. Of course, it's very volatile. It always has been. But if you look at more of a short-term basis, maybe like a daily chart, what's your take on it? Because it got up to $3 and was $1.50 just a couple of months ago. So it doubled in price suddenly. Now it reversed hard. Is there any short-term technical targets you have for folks to follow?
Come on, Shad. You know what I'm going to tell you, Shad. And I'm going to stay on this broadcast until you know exactly, until you repeat what I do in these kind of situations. When something has an extended move, what do I talk about? What do I look at? What do I focus on? Every move has a counter move. And I'll give it to you. I'm not going to give you guys a hard time like I do Dennis and Aaron on my show. But I love the 50% retracements. I love now I know the true Fibonacci numbers are 0.382 and 0.618 and 0.875 and yada, yada, yada. My observations in the market is the 50% retracement. That comes in below the 0.618. It comes in above the 0.382. So I'm just going to go to my trusty old-fashioned calculator. I'm going to look at the high of the move at 316. I'll forget the third digit. And then I'll look at that base that you had in May. You had a quad bottom, and that base was at 2.12. Survey says 52 cent is half of that. I said 2.12, 2.64. That's what I'd be looking for this to come into. Then the next thing I do is I go, well, are there any daily lows in that area? Well, not exactly, but you do have two lows straddling that area. You have a low on May 16th at 2.599, and you have a low on the 17th at 2.695. Today's low 2.84. When I see these kind of moves, I'm looking, if I'm a long and I'm like, okay, I'm just going to ride this out. This is just a retracement. You want to see if it comes back to that level, is supported at that level, consolidates at that level, and then moves away. So that's what I'll be looking at. 260, 270. If you're looking to buy the dip, if you think this is rallies for real here in copper, you're going to have a chance. You don't want to chase it. That's what I think your natural gas traders should be looking at. Let's just call it 265. I know the 50% retracement is at 2.52. So, and I know there's a lot of numbers in between there when you trade into 3 decimal points. But that's what I'm looking at in the natty gas market.
Joe, switching focus, you did mention Bitcoin earlier and how you'd rather be holding Bitcoin than gold. Look, Bitcoin's been moving mostly sideways throughout March, April, and now May. Lows down in, let's say, just under 60,000 and highs right around that 70 plus $1,000 level. Maybe this is a consolidation move. Who knows where the next direction is going to be, but what do you see in the Bitcoin market?
I look at it is that all the trading action, a majority of the trading action has been between 60K and 70K, going all the way back to March. So you're in a trading range. So I'd respect that trading range until it tells you not to respect it. You hit the top of that trading range earlier in the week off the Ethereum hype. The Ethereum ETF is supposed to be coming out. I'd be a little cautious on that because Bitcoin did not perform well going into that, sold off into the event, but then it ended up being one heck of a buying opportunity. So I just look at the consolidation between 60K and 70K. Once you establish the sustained bid over 70K, people are willing at that level, then boom, you get up. And I'm looking at the futures here. Take out that 75K area, and who knows, that 100 grand that everyone's talking about for a long time may be on the horizon.
Well, Joel, one more wild card to throw at you here. We've talked a lot with some of our guests on the show this week about energy. So we've been talking a lot about nat gas. We've been talking a lot about uranium, but you brought up to us solar, First Solar.
Oh,
talk about breaking out of a range. What do you make of that one?
We talk about different things on this show, and we talk about different things on our show. But I just like to try and provide education and color to your listeners. This is a Wall Street gang up on. I don't know what the short interest in this stock is, but this is all attributed to Wall Street and the Wall Street analysts. Now, it's true that they're more focused in the commercial as opposed to the residential. But this is what you had take place in First Solar here, just going back this week. That's earnings. Let me get to my analyst ratings here. So this is what you had going on this week. No one likes to be outdone by each other, right? So you have earlier in the week, well, come on, get me up to most current. This is what you had. On May 21st, both Barclays and Piper Sandler both raised their price targets. Piper Sandler 195. Barclays raises, they don't want to be outdone. They raise it to 227. Okay? No, that's not good enough. Actually, there was an upgrade on the 15th by Guggenheim. There was two upgrades on the 21st. I'm sorry, UBS. Then UBS comes out and says, no, you're all wrong. This thing's going to 252. All right. And then on the 23rd, yesterday's session, and this might have been late in the day, I think. I'm not sure when the JP Morgan rating was. JP Morgan says, hey, you guys are right. I'm raising my price target to 240. So the street just walked this stock up, and let's see if it holds. I would be very skeptical of the. We'll see. It's a breakout. It's new all-time highs by a wide margin, but it's all due to your Wall Street analysts just walking. I haven't seen something this pretty in a long time, but they just walk this stock straight up, and the investors are responding. Now, if the big boys are selling into it, the big boys are selling into it. But you had mentioned the TAN ETF. Yeah, it's having a good couple days. Doesn't look anything like that First Solar. So there is my jaded take on the moving for First Solar this week.
All right, Joel, enough said. And on, I guess, a positive note. Is that positive? The stock chart definitely is on that one. It's great chatting with you, Joel. Always providing some life to our podcast and covering a wide range of topics. Really do appreciate what you do over at Benzinga and the Pre-Market Prep Show, and also taking time on our show. So, Joel, have a great rest of your week. Have a great long weekend. We'll chat with you in another couple weeks.
All right. Thank you, gentlemen. You guys have a good weekend as well.